Welcome to TradeTheMBI.com. This is John. This report is for the 25th, and well, I promised you the increase in volatility. We started off soft back here. We had our buy on the intraday that I'm showing at this particular point that came in, and nothing changed on that. We had a gentle reset right here of the ES that put you right back at the exact same spot, so it left pretty close to similar entry, just maybe a point or two higher. And from there, it started off soft, then speaker got in there to suggest that, yes, on track is the stimulus plan for infrastructure. And boy, the market responded. That's all it's been waiting for. And the activity with some of the heads of business in that, the psychology. And economies are really a lot about psychology, and the psychology is that things are going to happen and get done. Now, we had a brief retrace at the end of the day, filling in some of the positive extremes, reset for a new buy pretty quickly right after that, and we can see the little pre-market pop already getting overbought, so that may have a little bit of softness going forward into it. But from an intraday standpoint, you can see how effective that was on an overall run. Now, turning to our daily chart, we have the lovely softness that we were in. We were expecting a turnaround. We'd already started to see the midterm buyers popping into it, and I had also pointed out the MBI opuses. Profit target on those hit for that version of the daily, but not quite the full contact for the catfish. Because the catfish at this point had an ATR right down here around 14, so it's going to be somewhere in the 80 range before that single contract setup gets hit. So that should happen not too far off if things continue the direction they're headed. This isn't a surprise. The expectation is that we would move to, well, I even said right back into that 2070 range was when we were at the low 60s, so pretty spot on with that. It went carried through a little bit. I think we might see a little backfill into it before it continues another move. And like we said before, the NQ was looking much stronger and still is. Cyan still below red, so on the DOC, and that's always an indication. We are overbought, so these will get filled back in on any little pullback, but that extra volatility that we were expecting is not a surprise. It was built into the setup as we were going forward here. So now we have the euro right back at that range, but it's hitting a little bit of the resistance there. That's going to be normal. It should still break back up into it. A little bit of a retrace. That blow that the EU gave to, well, at least the Supreme Court gave to Brit exit, certainly helps the euro. Clearly some people knew that was going to be taking place or pre-positioned, but we'd already seen central bank activity always right around that 104. They weren't going to let this thing break down, because if it did, it posed more problems for the U.S. than not. The real question is going to come down to this new developments with the oil pipelines, and whether that is going to have a dramatic effect on capacity issues, how long it will be before that ramps up. It's going to be a few years, but still could have very significant implications on policy for oil and that, and what happens to the equilibrium of oil as far as OPEC, and that could change things dramatically, and that has all sorts of geopolitical implications. Now, TLT, again, we expect this to be moving lower, no question about it, particularly if some of that economic excitement starts to translate. And even in the earliest signals, it's going to be a hyperbolic move, simply because the fear quotient of how far that can move against them, the potential for rising inflation and or rate increases is going to scare so many people. Now, I think it's a bit overdone, simply because there is still plenty of slack from the labor force to keep wages down, and oil certainly isn't going to be rising, so there really isn't this pent-up thing. Now, if you believe that unemployment's at 4%, then yes. If you don't, and you believe that labor participation has a lot of slack in there, then a lot of that can be absorbed without seeing significant wage pressures causing inflation, because that's literally all that's going to cause it, because it certainly isn't coming from the demand side can certainly be met, as well as oil prices are not driving an inflationary pressure, and you can see that flat line This pretty much tells the story where things are at. And I don't particularly see that changing. Gold, we continue to expect continued increases. It's an interesting. There are some forces that are trying to prevent it. Obviously, the pulling of cash from India. They're going to be trying to move that into more countries, and then China, with some of its controls, could have impacts here. But the general bias for gold should still be on a long-term scale, moving back towards the 130s or plus on the GLD here at least. And I think that could be conservative. That's a long-term play. And that moves us back here to the 5K chart. So we're it gets old when you say we're in line with it, but it's like we knew about this before it took place, and that's why we talked about it. And that's the importance of being able to see the broader macro picture inside of intraday. And in this particular case, it was a very easy intraday call from the adjustments that we had from the shakeout test that I was pointing out, and how it just continued, and all we ended up with were just resets that came through, but no change. We barely even had a dip below the ABM yellow line here, not even testing the green. That happened early on, which was, again, this is where that equilibrium, they needed more contracts all right around that same thing, and then so the dip right there was just to get back to it, make sure that they had enough of what they needed, and then it just slowly inclined from there. And you're going to see more of that kind of pressure, and that's how it's going to ease out shorts a little bit of time. And they keep saying, oh no, it's overdone, so they keep adding into it a little bit, and that really is what you need to drive the market a lot higher. So it keeps sucking them into that soft position where they think they can get an edge to the short side. But this gloom and doom has been an interesting thing, and if you're reading about gloom and doom, then probably not going to happen. So it's always something, the narrative is way behind where the market is, always. So as always though, trade well. We'll talk again later.